Hi everyone, my name is Lucian. Most of you know me from Twitter as Triangle Investor, and today I'm joined by Corey Diaz. Corey is the CEO of Anfield Energy development company and near-term uranium producer with assets in the United States. Mr. Diaz, welcome to my show.
Thanks for having me.
The pleasure is all mine. Big news for Anfield with yesterday announcement. But before we touch on that, please give us a short introduction of yourself. Who is Corey Diaz? How did you get involved in uranium industry and Anfield Energy?
Sure, it's a bit of a long and winding road, but I was born in England, grew up in Canada, did all my schooling here, did do my MBA. I will name the school at the University of Western Ontario.
Mm-hmm.
I did an exchange semester over in Sweden where I ended up working for a consulting firm called the Monitor Group, which was bought by Deloitte a few years back. Moved back to Toronto and worked in equity research, so in capital markets, where I started covering stocks. Spent a few years there, then joined a hedge fund, which allowed me to look at a number of different sectors and determine opportunities from the private equity perspective.
Mm-hmm.
And then moved back to research again with some newfound knowledge and started covering names which were kind of earth-moving industries such as potash.
Mm-hmm.
I got involved with one company, and the CEO actually asked me to join him in another venture, which ultimately turned into Anfield Energy. And so I've been at the helm of Anfield for about 10 years now. We've been looking to acquire assets both in good markets and bad markets. And it's culminated in what we've managed to put together today.
10 years, that's a great number. And let's start with big news from yesterday. What's your comment on this news? What do you like the most about this project? And tell me a little bit more about this transaction.
Sure. I think this is a fantastic transaction for Anfield for a number of different reasons. First of all, it's an 18 million pound resource, which is the largest resource that we now have within our portfolio.
Yeah.
We do have, a number of other smaller assets, but this essentially adds over 60% more uranium resource to our portfolio, which I think is very, very significant.
Yeah.
I think the fact that it's an advanced asset is also important, and it follows our strategy of buying assets which are either have historical production, have a current resource or a historic resource, because we don't want to spend the time to have to delineate resource. That's not our business. Our aim is to get into production, so we need assets that are advanced enough for us to move forward quickly with those assets. Thirdly, it's a foothold in New Mexico. As you know, or you may not know, but New Mexico is kind of the region which had the most uranium production in the United States in the past. So we now have a footprint in the four corners. So Arizona, New Mexico, Colorado, and Utah, all the places where uranium production took place. And finally, the fact that we have a mill through which those pounds can go gives us a significant advantage when we're looking at production going forward. So it ticks a number of boxes within our plans, and certainly the idea of having New Mexico pounds that can go through a mill following on from Utah and Colorado, I think is a big win for us.
Definitely. Do you see this project as a game changer for your company, and will this project become your flagship project?
It won't be our flagship project, but I think it's very important. As I mentioned, the size of the project, the number of pounds we can pull from this project, and the lifeline, through which it can go to our mill, I think is very important. So, I think it provides strategic value to us. I think the nearer term assets, the Slick Rocks and Velvet Woods are certainly going to be the ones that will be priority right now. But ultimately, if we were looking to build a pipeline of 30 to 40 years, we need to have significant size resource, following on from those assets. And certainly this is one that can play a major role in our production plans.
Yeah. You will get this project by paying 5 million in cash and issuing 185 million common shares of the company. That is around $11.2 million transaction. Is that according to yesterday's share price? Do I get this right?
Yeah, so the shares are probably worth about, I think at a 6 cent price is about $11.7 million, and then the cash, so we're at about $16.7 million. So we're paying on a
Yeah.
US dollar basis, it's probably close. I think it's 58 cents Canadian, and so a little bit less than that on a US dollar basis. So we tend to trade closer to $1 a pound. So we think that it's a good deal for us if we're buying pounds at less than where we trade. So, certainly we think that we've gotten a good deal out of this. Yes.
Okay. If my math is right, the Uranium Energy Corp will hold some 11% of the company, and Encore will hold approximately around 22%. Is that correct?
It is, but I think we've also got to include we're likely to raise money in order to help fulfill the cash payment related to the transaction. So that'll bring Encore below 20%. So ultimately, Encore will not be a 20% holder post closing of the transaction.
Okay, but when do you expect to do this raise?
I would assume that we need to have the funds in place. We have about $4 million in our bank account now. We have to pay $5 million. So by the time this closes, so by the end of July, we'll have provided that $5 million to Encore. So sometime between now and then is when we'd be looking to go to the market.
Yeah. Okay. Let's get to your other projects. Can you give me a fresh update on the mill? This is the one of the 3 licensed conventional uranium mills in the United States. It's pronounced Shootaring, right?
Shootaring, correct.
Shootaring Canyon Mill. What is the current status of this mill, and what is the plan and budget for the next 6 to 12 months? And my main question is, when is this mill going from standby to production?
So I guess there are a few points in there. So we're currently working with a group called Precision Systems Engineering to put together a reactivation plan for the mill. We're expecting to see that reactivation plan, at least the first phase of it, by the end of next week. And that'll provide us with details related to what we replace at the mill, what we can keep, and the items that need to be replaced, what the costs would be associated with the replacement, and the timelines associated with the replacement. So we have a full idea as to when we need to start spending money. For example, if there are long lead items, that would be, need at least a year for us to procure, we'll need to order those probably this year. So that's the first step. The second thing is we need to work with the state. So we're working with the state of Utah in order to move the current license, the radioactive materials license, which governs the mill, from its current standby position to operational. And part of that process is for us to provide the state with essentially an application for that moving from one state to another. This report from PSC, along with a report that will be completed for decommissioning of the mill in the fall, has to be provided to the state. And once the state receives that information, it'll probably take about a year back and forth with the state for the state to approve the movement from the current standby to operational. So it's important to note that the state won't be deciding whether or not it will move us from standby to operational. It's just a process through which it has to look at all the information and then says, okay, we're going to move it. So there's no risk of it not being granted. It's just the state needs all the information in order to grant it. So that's
okay. Just to clarify the timeline, the company expects to be in production in 2024, 2025.
Correct. Yes, by late 2025 would be our target.
Okay. And how much of U3O8 do you plan to produce, and at what cost?
So our aim at the moment, so if you saw the PEA, so we do have a price, the uranium price and vanadium price, because we're dealing with both uranium and vanadium mills.
Yeah, I know.
The break-even price is roughly $42 uranium and $7 vanadium. The price that we use within the PEA was about $70 uranium and $12 vanadium. So, from our perspective, we think the price is going to move on the uranium side, certainly, and we expect to see a strong vanadium price given the vanadium flow batteries, etc. So we're very comfortable with the numbers that we did use. And, I think that in terms of production, within that PEA, we hit peak production of about 1.7 million pounds per year. And when we apply to the state, our aim is to have a license capacity of between 2 and 3 million pounds per year. And that's why it's important for us to pick up assets such as the Marquez Montefoya, Mexico, because we're looking at a large scale production plan.
And what would be the mine life?
The mine life for Montefoya?
Yeah.
That's probably about a 5 to 7 year mine life.
Okay. Just quick comeback to question about the mill. At what price did you bought that mill, and what do you think? How much is it worth today?
So when we bought the mill, so there are a couple of components. So we paid roughly, I'd say about $5 million worth of shares at the time, and then we also replaced the bond that was associated with the mill, and that was about $7 million. So all in, it was roughly $12 million US. In terms of what it's worth today,
Yeah.
there aren't
It's
many.
a hypothetical question, I know, but
Sure. And in terms of where we see the potential price and value of the mill is that I know that a few years ago, one of our competitors put out a report looking to build a mill in New Mexico, a smaller mill. We're up 750 tons per day. The
yeah.
mill that was proposed was about 500 tons per day, and the cost was roughly $150 million. So just using that math, our mill should be worth over $200 million today. It's not reflected in the share price, as you know.
Definitely.
Certainly, that's the upside potential related to the valuation of our mill.
Yeah. Can you tell me more about Velvet Wood and Frank M deposits? At what stage is that project at the moment, and what are the plans for the next 6 to 12 months?
Well, Velvet Wood is part of our initial production plans. We acquired that at the same time as we acquired Shootaring. It has past production, 4 million pounds of uranium, 5 million pounds of vanadium, and is ready to go. It has a large mine permit. There are a few other smaller permits which are required for us to move that forward. It will probably take about a year for it to be ready for actual production. So we're, as I said, that's going to be one of the first mines up and ready in combination with Slick Rock. In terms of Frank M, that was another asset we acquired from Uranium One when we acquired the mill. That is a mine which it's a bit smaller. It's about 2.2 million pounds of resource, but it's lower grade. So the one thing that we're going to consider using that for is if we've got significantly high grade coming from somewhere else, we can use the pounds that are at Frank M to help dilute it for kind of a smoother transition into the mill. So it's not in our near-term production plans because of the grade, but certainly we do think that it could serve a purpose as we start bringing in higher grade from Colorado.
Yeah, but you have with these projects you have a room for expansion. It's a big property, like 40,000 hectares, right?
Yes, there's definitely room there. But because we've got other resource and our priority is to focus on the resource that we do have,
Okay.
that doesn't come into play in the near term.
Okay. Tell me more about your West Slope project in Colorado.
Sure. We acquired West Slope from Cotter Corporation, which is owned by General Atomics, which is a weapons defense manufacturer based in San Diego. This asset was, at the time, it was 11 million pounds of uranium, 53 million pounds of vanadium, covered by 9 mines. And there was past production there up until 2006. So we negotiated that transaction as part of another one that we had for the Charlie property in Wyoming, which is subsequently traded to UEC for Slick Rock as part of our Wyoming swap. From our perspective, we thought this is a great foray into Colorado, and certainly, given the size of the mines, given the grade of the mines, which are 0.25 uranium and 1.2% vanadium, we thought it made sense as kind of near-term production possibilities, especially because all the mines are open. You can see the adits, you can see the equipment inside, you can still see some of the ore sitting in some of the mines themselves. We know that there's a very low cost to get those up and running again. So that's why they're very appealing. The other part is that, our chairman today, Ken Mashinsky, was actually the president of Cotter when we negotiated the deal with Cotter. And it took about 2.5 years for us to actually consummate the deal. But during that time, we got to know Ken quite well. And ultimately, once he retired from Cotter, he was interested in joining us in some capacity. So I've got, two things for one transaction, working with Cotter.
Okay. Can you expand a little bit more on Arizona project?
Sure. So Arizona, we also acquired a small project called the Finley Tank Project from Uranium One as part of the Shootaring Canyon transaction. It's just under 1 million pounds of resource, but we've also looked at a number of other properties within Arizona, which we thought could potentially make sense as we start moving forward when it comes to production. And once again, Arizona is another one of those states that has had past uranium production. So we know there are large mines there. Where we looked at the Dripping Springs quartzite project. There's some UEC projects that are in the vicinity. As you know, transaction with UEC. And so, being in close proximity doesn't hurt when we're looking to potentially negotiate in the future with UEC to acquire more assets. The largest UEC asset in the area is at the Anderson mine, which is over 30 million pounds of resource. So we're looking to build up, a few resources to complement what we have within the portfolio, with an eye at looking at larger transactions down the road. So, and once again, we're creating a pipeline of projects from which we can produce. We have near-term assets in Colorado and Utah. We've got an intermediate-term project in New Mexico, and Arizona is another place where we can, create more pounds that can, build a sustainable long-term pipeline.
Yeah. We already discussed about future percentages owned by the Encore and UEC. Who else is in your share registry as a big shareholder? And can you tell me how much percentage of the company is held by insiders? And of course, you personally.
Yeah, I think in terms of the institutional holders, unless they're on the public registry, it's tough for me to talk about them because a lot of them like to do things under the radar. But obviously, the public ones that you mentioned, the strategics, the UECs, and the Encores are significant shareholders, and have the ability to join our board in order to facilitate plans going forward. So I think that's important. In terms of management and insiders, post this transaction, we're probably looking about 4% total, of which I'm probably about 1.5%. Another shareholder is probably another director is probably about another 1.5%, and then the rest, the 1% is spread out amongst the other directors essentially. So we have small positions, but if we look at the financings that we've done over the years, at least one or two of us participates, from the board or management participates in every financing. So we do believe in the story, and we'll continue to fund it as we go forward here, because we think that we're undervalued, as I'm sure every CEO tells you. We think there's certainly upside, in terms of our valuation of these our peers.
You touched on your team. Can you expand on that? Who are the guys behind the Anfield Energy?
Sure. So, as I mentioned, I'm one of the co-founders of the business alongside one of our directors, Josh Bleak. Josh is a fourth generation mining person. His family's been in mining and uranium mining, has worked in Utah and Colorado over the years. He's actually started a couple of mining companies, has worked in drilling. He's our guy on the ground essentially for a lot of the projects that we look at, if we're staking or acquiring. So he moves around a fair amount. He's usually on the road looking at other, kicking tires for us. We identify assets. He goes down to see them first, and then we have a discussion about, moving forward on those projects.
Yeah.
He's a significant person within the company, so a co-founder. We have Ken Mashinsky, our chairman, who was at Cotter and General Atomics for 30 years, has seen all the different aspects related to nuclear, has helped to build nuclear plants, has run a uranium company that was producing 5 million pounds a year out of Australia, Has done sales and marketing as part of the General Atomics uranium marketing arm. So he's been involved in the management committee over ConverDyn. So he's touched so many different aspects of the nuclear cycle. And so, us moving forward to try to get into production, he is the key person for us to rely on in order to facilitate that move. We do have Steve Lunsford on our board, 40 years as a geologist, has worked for Cameco. He's the person who digs deeply into our data rooms that and when we're looking at assets, and can give us a good sense as to what we're looking at, what challenges we may face when we're looking to pull the trigger on a transaction. Don Falconer, fellow Canadian who has worked for a group called Ontario Power Generation and the nuclear division, doing sales and marketing. So understanding the sales and marketing cycle, the contracts, how to create those contracts, how to write those contracts. He's also been a big help. So everybody on our board has been very, has a function and a role outside of just sitting there determining, good decisions, bad decisions, but also being able to contribute, as we move things forward, where we identify projects, how to determine how will those fit into our current plans and how to ultimately move those forward to production. So it's a very functional team, a very strong team, and it's been, in place for a number of years.
Sounds like very experienced team.
Yes.
Do you see more M&A in uranium sector in the short term?
I do. I think that there's a lot more interest coming into the sector, not only with existing players or incumbents, but there are also new players coming in who are looking to establish themselves relatively quickly. And so what we've noticed that it's become a lot more of a competitive process when coming to acquisitions or transactions. There are a number of players who are throwing their hats in the ring for assets that 5-10 years ago nobody had an interest in.
Yeah.
One of the advantages that we've had over time is that we were buying in a low price environment where a lot of people were just trying to leave the market. So we had the opportunity to pick up assets on a relatively cheap basis, but we do see more competitive transactions taking place now. And so we're adapting our strategy in order to meet this new market. We're very confident that we'll still be able to do the things that we've been doing in the past, and we certainly know that there are opportunities out there to continue to acquire property.
And one question regarding the uranium spot price. Where do you see spot price in the next 6 months?
I see it going significantly higher than where it is today. I think that $70-$80 price is not
Impossible.
it's certainly something that's going to come relatively quickly. I don't think that if it reaches triple digits by early next year, I wouldn't be surprised. I think that the price itself is reflective of the scarcity of the material. I think there's a lot more fallout to take place when it comes to the U.S. government trying to ban Russian material. I think there's the possibility of Russia deciding to unilaterally turn off the spigot and not sell to the U.S. So there's a lot of other risks associated with dealing with Russia. Obviously, China stepped in, is creating stronger relationships with Kazakhstan and Kazatomprom. Kazatomprom is selling the majority of its production to China. I think that's all material that's not going to flow into the North American market. You've got Cameco selling to China, China Nuclear, which means that material is not coming into the North American market. So I think there's a lot of challenges for U.S. utilities today. And will that create a bifurcation of pricing? We've got a U.S. price versus the rest of the world price. I think there are a lot of moving parts here, and I think that there's a significant amount of risk to material flow coming from the east to the west. So I think the spot price will certainly be moving up rapidly.
Yeah, agreed. Okay, before I let you go, I have a format in my show where I ask my guests 10 quick questions. I call them B&B questions: bullish, neutral, or bearish. I say some commodity or stock, and you say bearish, bullish, or neutral. Okay? Let's start. Are you ready?
Sure, let's go.
SMRs.
Bullish.
Okay. Copper.
Bullish.
Gold.
Bullish.
Great. Silver?
Neutral.
Neutral. Oil?
Neutral.
Okay. Bitcoin?
Oh. Bearish.
Every guest I ask, everybody says bearish.
Yeah.
Tesla stock?
Ooh. Neutral.
Okay. Apple stock?
Mm, bullish.
Mhm. US dollar?
Neutral.
And one final US economic outlook.
Hmm. I'll go with bullish.
Okay, fair enough. How can investors reach out to you and your company?
Anyone can reach me. The website is anfieldenergy.com. I can be reached at cdias, D-I-A-S, at anfieldresources.com.
Okay, great. Corey, thank you very much for being my guest. I wish you all the luck with your new and old projects and hope we will catch up soon again.
Absolutely. Appreciate your time. And thanks again for having me on.
Thank you very much.